Hey, it's Amy Lewis from KFBK's morning show. But actually, I'm a hologram because I'm not here right now. I'm actually on vacation. So pretend I'm here.
Absolutely.
Does that
Let's do
work?
it.
This is Brandon Haefele from Catalyst Mortgage. We're doing the Catalyst Report with a hologram. So I hear story after story, Brandon, seriously, of people saying the numbers quoted don't match the disclosures. So let's talk about the disclosure process. What really happens during the disclosure process?
So up front, once you've decided what term you're going to go with, payment, program, et cetera, you get your disclosures sent to you. First off, they have to be sent to you within 72 hours of doing your loan application. So that's a requirement up front. But when you get that, that package, the first thing you're going to look at, that I always say is one of the most important things, is your loan estimate. And the loan estimate replaced the good faith estimate as we all knew it, a couple years ago. And it's a new form that details your rate, APR, payments, and so on.
When you get that, though, do you, as a consumer, say, "Okay, I have this. This is the word of God right here," or do these vary?
Well, it depends. If your rate is locked, which most people lock up front, then it should be exact. It should be very clear. Okay, this is what your payment's going to be. This is what the closing costs will be. If you're paying any points, what you'd pay to buy your rate down. But it really should be exact.
But when you get those numbers, do you, as a consumer, have the ability to say, "I don't want to pay that," or "I don't want that rate," or "it needs to be this"?
Absolutely.
But doesn't that come along with being educated?
Yes to both.
Hello.
But I think that when you see that on paper, sometimes when a mortgage professional quotes you right over the phone and a scenario, once you see it on paper, your opinion might change a bit. So even though something's put in writing on a loan estimate, you could always change your mind to a different program. Let's say the no cost option looks better than paying all these fees now once you've really thought about it. So yeah, after that, you can still change things around during the process.
Well, what really does the word disclosure mean? What do you guys have to do?
Well, we're required to give you, what used to be called good faith estimate as to what we're going to do. And really, the Consumer Finance Protection Bureau has changed it from good faith estimate to this is what we're doing for you. There cannot be changes. So when when a company puts something in writing, they have to stick to that unless a material fact changes. Your loan to value changes. Let's say your rate lock expires and they have to add a charge for that, and so on. So when those things are put in writing, they have to stick.
But as a consumer, when I talk about disclosure, what things do I have to disclose to you? I mean, you don't want my SPY code, do you?
I don't know about
We'll
SPY
talk
code.
about that later.
Okay. When you're back, physically,
exactly.
you're not a hologram.
Hologram.
I think that for consumers, they have to act in good faith. Have you had any foreclosures, bankruptcies? Fill out your loan application completely to make sure that the company can give an accurate estimate to you up front. But besides that, really, it's more on the lender. It's more on us to show you, hey, this is what I can offer you, and then you as the consumer can make the decision at that time.
But I think what's important too is, as the consumer, not to be afraid to disclose that you've had a bankruptcy, because you guys can help us make sense of that and help us work that through to get the loan, right?
Well, I think
nothing
for sure.
ill toward, but just you have to be real.
Really, exactly. And the more honest you are up front in telling your professional what your financial situation is, the better chance you're not going to have a problem later. Because like I said, they really can't change unless a material fact changes. So if you started a process and you have a bankruptcy that's 2.5 or 3 years, but you didn't disclose it, well, that's going to change the loan program and potentially even change the loan from closing, depending on the lender. So really, full disclosure up front, and then you should receive full disclosure at the same time.
Yeah. So if that doesn't happen, does that stop the loan? Does it delay the loan? What does that do?
Well, depending on each lender, it's a case by case. If lender A has certain guidelines, underwriting guidelines, where lender B might not, so it might just be a simple, oh, hey, your pricing changes a little bit because of X risk, or it might not be any change. It really just depends case by case. But again, being full disclosure up front. But I want to be very clear, you don't have to even do a loan application with a mortgage company to get a loan estimate. We're required to send it to you either way. We're not allowed to require you to do any paperwork with us or anything to get that loan estimate.
Okay, so the beginning. Let's go back to the beginning. For full disclosure, what are the first things that happen? The numbers.
So you get the quote, have everything put in writing. Once you actually verify this is what you want to do, then you'd sign your loan disclosures, whether it be signature or e-disclosure where you sign online by clicking your name. I always recommend, if you're going to do that, print those out, really review them, because a lot of, consumers click, 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 click,
Yeah.
don't read the documents, and really read it. And if you have questions, like we talked about last week's segment, or this week's segment, or wherever you're
It's
at.
a hologram,
It's
just
a
go with
hologram.
it.
With that, ask the questions on the documents that you don't understand. Stop and ask.
Yeah, absolutely. So we are kind of being fun about me being on vacation, but here's the thing. This is serious stuff. So this is the stuff that you don't need to be afraid of, but you have to be serious about when you're looking at this. Don't be a confused consumer. Get educated, as Brandon said, but really trust the people that you're working with. So for more on this, go to catalystmortgage.com, and that's the Catalyst Report.